All right, let's peel back the layers on this one. Today, we're diving deep into the Q1 FY26 financial results of KPIT Technologies,
Yeah.
a truly significant player in the rapidly evolving mobility software space. Our mission, to sift through their official reports, their investor updates, all released just on July 30, 2025, and extract the essential insights and maybe some surprising facts just for you.
Yeah, and just to set the stage a bit, what we're looking at here are KPIT's unaudited numbers, both consolidated and standalone financials for the quarter ending June 30th, 2025. And a key detail for you is that their statutory auditor gave an unqualified opinion. Basically, that signals a pretty high level of confidence in the numbers that they're trustworthy.
Okay, good context. So let's zoom out then. Look at the big picture, their operational performance. Because there's a trend here that really catches the eye. KPIT has this amazing track record. We're talking 20 straight quarters of steady revenue growth.
20 quarters.
And get this, 20 consecutive quarters of steady EBITDA growth, too.
That's pretty remarkable consistency.
It really is. Something most of us, wish we saw more often. So for Q1 FY26, their consolidated revenue from operations, INR 15,387.61 million. Now, compared to the last quarter, the QQ growth in dollar terms was small, 0.3%, but year-over-year YoY compared to last year's Q1, a solid 7.8% increase. But there's always a but, right? The nuance is constant currency growth. That actually showed a dip, minus 3.2% QoQ.
Right. And that brings us to the profit figures. It's really critical for you, the listener, to look beyond just the headline number here. So the reported net profit for Q1 FY26 was INR 1,718.99 million. And yeah, that looks like a drop, down 15.8% YoY and almost 30% QoQ. But what's fascinating here is why. It's mostly because previous quarters had these significant one-time gains boosting the numbers. Like, remember Q4 FY25, there was that gain from the Quarks joint venture dilution. And Q1 of last year, FY25, had gains from Quarks JVD recognition, IP transfer, plus an insurance settlement. So if you strip all those one-offs out...
Ah, okay, so you're saying the underlying picture is different.
Exactly. If you exclude those one-time impacts, the underlying sort of recurring profit for this quarter, Q1 FY26, it actually showed a tiny bit of growth year over year, 0.3%, which really underlines why you got to dig into that underlying performance to see the real health of the business.
Makes sense. And despite some of those, pressures maybe from the currency dip, their EBITDA margin held steady at 21.0%, which, as a measure of operational profitability, that seems pretty strong, right? Indicates efficiency.
It does. Very strong indicator. And another important point, they actually recorded a foreign exchange loss of about 240 million. And that loss wasn't even included in that EBITDA calculation.
Wow.
So the fact they held that 21% margin despite that kind of currency headwind, that suggests, well, some very robust underlying operational strength.
Right. So let's piece this together. What does it tell us about where KPIT is actually growing? Let's break down the regions. Asia saw really strong growth year over year, jumped, 40.8%?
That's huge, yeah, over 40%.
But that contrasts really sharply with Europe. Europe saw a YoY decline of 7.2%. That's a stark difference. What do you think is driving that? Just different market conditions? Or?
No, I think the sharp divergence kind of highlights KPIT's strategic agility, actually. It suggests they're not just, passively riding market waves. They seem to be actively pivoting towards higher growth areas like Asia in this case, maybe hedging against slower demand in more established regions like Europe. It could signal a deliberate sort of geographical de-risking strategy for them. And if we look at their business units, cloud-based connected services. That saw significant growth, up 18.5% YoY and over 11% YoY.
Okay, strong demand signal there.
Definitely. And then the verticals, passenger cars grew about 10.2% YoY, but commercial vehicles, that saw a decline, minus 5.5% YoY, which, certainly suggests different things happening in those specific segments, maybe shifts in fleet upgrades or consumer focus.
Interesting. And on a strategic level, there's this shift towards dollar price contracts. They now make up 62.5% of revenue in Q1. That's a big jump from 53.5% just a year ago. What does that mean for you listening?
Yeah, that's quite telling. For you, this move towards fixed price, it generally suggests a couple of things. One, probably greater project maturity. The scope is well defined. Two, it often implies more predictable revenue streams for KPIT, less fluctuation than hourly billing. And it can also indicate maybe a deeper integration with their clients' projects, moving towards being a solution provider, not just, providing hours.
Right, more outcome-based.
Exactly. It kind of reminds me of how the broader software industry matured, moving away from pure time and materials.
Okay. Now, moving on to some really exciting strategic stuff. KPIT announced this major partnership with JSW Motors. The plan is to build the software and digital backbone for JSW's new energy vehicles, their NEVs, here in India. It's a huge commitment. JSW Motors is pledging, what, US $3 billion over 5 years?
3 billion, yeah. Massive.
And their first NEV is set to debut in the second half of FY26. So not too far off.
And if you connect this to the bigger picture for KPIT, this collaboration really solidifies their strategic focus on the Indian market. It's a big bet there. And it lets them leverage all that deep expertise they've built up. You mentioned over 2 decades, more than 2,000 global vehicle programs, including these software-defined vehicles, or SDVs.
The car's basically running on software.
Pretty much, yeah, like computers on wheels. This JSW deal plays right into that strength. And speaking of new business, they won significant new deals in Q1 FY26, totaling $241 million.
Yeah, and these weren't just small wins, were they?
Mm-hmm.
Included a big European commercial vehicle maker for connected tech and diagnostics, a major American car manufacturer for AI-led platform validation. That's interesting. And a leading Asian OEM for middleware, autonomous driving tech, and electric powertrain work.
Right. And notice how these wins align perfectly with KPIT's core focus areas that they keep talking about: AI, EVs, middleware solutions. It just reinforces their strong position in these really critical high-growth parts of the auto industry. And then there was the acquisition front. The Caresoft Entities deal got approved in May.
Right, Caresoft. They're leaders in automotive benchmarking, cost reduction.
Exactly.
So strategically, what does bringing Caresoft in do for KPIT beyond just adding revenue?
Oh, it's quite strategic. Several layers here. It should boost their growth in trucks and off-highway vehicles. That's one area. It adds significant value for clients through vehicle cost reduction solutions. That's Caresoft's specialty. It enhances KPIT's own manufacturing engineering portfolio. And importantly, it's expected to accelerate their entry into the China market. That's a key goal. We also saw more evolution with their Corix GmbH joint venture with ZF, and that recent strategic investment by Qualcomm Ventures into Corix.
Right, Corix. What's the key takeaway there? What's that partnership really about?
Well, Corix is laser-focused on automotive middleware stacks, which is basically the crucial software layer for these software-defined vehicles we mentioned. So this partnership, especially bringing Qualcomm Ventures in, it significantly strengthens KPIT's position right there. At that foundational software level for the future of cars, it's critical. And it's not just about deals and software, they're physically expanding too. New software engineering centers in Tunisia and a new technology center in Gothenburg, Sweden.
Right, Gothenburg. Makes sense. Close to key European OEMs. These centers seem key for collaboration, tapping into local talent, really fostering innovation in these global mobility hubs, shows they want boots on the ground.
Absolutely, a commitment to being close to the action.
Now, shifting gears slightly, let's look at their workforce. We actually saw a small decrease in total headcount this quarter. Went from 12,873 down to 12,545, specifically in development roles. Yet, as we said, their margin stayed stable. How does that work? Fewer people, same efficiency.
Yeah, that's where the management commentary really provides the key insight. Sachin Tikar, their president, he explicitly stated this: KPIT's internal AI framework is being actively used by their software developers for client projects, and he said it's bringing meaningful productivity benefits.
So AI is making the existing teams more productive.
Precisely. So even with a slight dip in headcount, they're leveraging technology to boost output per employee. And that's leading to the efficiency gains supporting those stable margins. It really highlights their focus on AI-led productivity and quality tools for employees.
So KPIT is essentially showing a potential blueprint here, right, for AI-driven efficiency in the tech services world. Right. Proving that maybe you can decouple growth from just adding more bodies. That's a powerful idea. But looking ahead, is there a risk there? Could AI productivity eventually, I don't know, cannibalize their own growth, like needing fewer engineers long-term?
That's a really interesting, valid, long-term question. For now, though, the focus seems to be much more on enhancing the capacity and quality of their current work, using AI to tackle more complex projects, perhaps, rather than just purely reducing headcount as the main goal. And management seems pretty upbeat. Kishore Patil, the CEO, noted Q1 was in line with our expectations, despite those macro challenges. He sounded optimistic that things like geopolitical issues, tariff uncertainties might settle down within a quarter or so. And he sees big opportunities in, quote, India for India solutions, and also China.
Right. And Sachin Tikar also emphasized their progress in creating these specialized AI models specifically for mobility. He highlighted how KPIT's own solutions, their validation suite, reference architecture, benchmarking tools, middleware, they're already being deployed, and he sees significant upward potential there.
So the critical question then becomes, how effectively are these strategic AI investments and all these partnerships actually laying the groundwork for sustainable future growth? Management clearly feels confident. They expect, quote, growth momentum as we exit the year, led by their top T25 clients. And what they say is a robust pipeline.
Okay, so let's try to wrap this deep dive up. We've seen KPIT Technologies show some impressive resilience in Q1 FY26, navigating those macro headwinds with pretty remarkable consistency, especially on the margin front. Their strategic moves, partnerships like JSW Motors, the Caresoft acquisition, they show a clear, proactive plan for the future. And underpinning it all is this deep strategic bet on AI and the whole software-defined vehicle revolution.
Yeah, and maybe the thought to leave you with is this. When you consider KPIT's proactive investments in AI, these strategic alliances like JSW for India's specific needs, how might these focused decisions profoundly reshape the global automotive software landscape in the next few years? And what kind of completely new innovations might bubble up from this very targeted approach they're taking?
Yes, exactly. It's a space that's constantly shifting, constantly innovating. And we hope this deep dive helps you, our listener, continue exploring that fascinating intersection of technology and mobility.